All right, everyone. Thank you for watching. This is your mid-February market update through February 13th. The S&P 500 as of close was up 9.48, NASDAQ up 11.75, Dow Jones up 8.99, gold up 4.7, and Bitcoin down just 2%. Again, the stock market peaked in about September last year, and then it was down about 20% into late December, and then has been on a huge rally back basically since the first of the year. So that's why those numbers are the way they are. Got several charts for you today. Wanted to jump into it. Going to start with a different view. This is our monthly view. And I put some red lines on the screen just to kind of show this trading range that we're trying to get out of. And you can see we had a similar horizontal trading range back in 2015, 2016. And it's kind of acted like a stair now to allow us to go higher. So we're waiting to see kind of a high level where we're going to come out of this. But in this chart, we want to see this gap between the green lines and the red lines. We still have a pretty healthy separation there, and the red lines are fanned out nicely. So they're very bullish chart still on that, and price is trying to regain on top here to new highs. So again, that was a monthly view zoomed out. Now I want to go into, this is a daily chart, so this is a lot more zoomed in. And so every candle represents a day, and this is the S&P 500. So you can kind of see that the S&P peaked here late September, and then has been steadily declined into the fourth quarter down here. We kind of have this V bottom, and so I put these red lines on here as well to really show you this trading range that we've been in for quite a while with the S&P 500. And so typically we call this like a head and shoulders pattern, and this would be an inverse head and shoulders. And so this is the head down here. This is the left shoulder here. And I would estimate that the market would pull back here potentially, probably getting up to this red line and then pulling back to this bottom red line, creating the right shoulder before we move higher, or it breaks down to new lows. And so yeah, very aggressive bounce off the bottom. It's hard to tell how much of that is investors and institutions, and how much of that is the Federal Reserve. I think one of the things we're starting to notice is that the Fed is injecting lots of liquidity into the market. And so this decline in October to December was a 20% peak to trough, and it really, the only peak to trough drop of 20% that happened faster than this one was the Great Depression. So it was pretty aggressive drop, and now we're seeing one of the most aggressive rebounds out of something like that too. And so to me, that lends that the Fed is injecting quite a bit of liquidity. We even heard here the Secretary of Treasury organized some of the top banks to convene into late December to talk about how precipitous the drop was in the market. And obviously those conversations aren't published for you and I, but seems like they've injected quite a bit of liquidity into the market. And when you look, some of the data that I've seen shows that there was a lot of purchases put in here to basically put a floor in the market, like $50 billion worth of purchases into just the S&P 500 or something like that, or very aggressive amount. I can't remember what the actual amount was, but it was a lot. And it was done in concert. And so could have been part of that conversation with the Secretary of Treasury. We don't know, but obviously we'll take higher prices. But the volatility has been very aggressive. And so here's a weekly view of the same chart, S&P 500 breaking down up here. We kind of got that red arrow. You can kind of see it behind there. And then, our moving averages, this is an 8-day and 21-day rolled over. We did get a green arrow down here. The system is just pretty slick to show us this stuff. And now we're trying to get, like I said, back to this red line up here, and then we'll kind of see what happens. And then zooming out to our normal chart, this is a monthly view. Again, you kind of see we're still in this long-term horizontal trading range that we're in. Market's trying to figure out what it wants to do. This candle did not touch this bottom white line, so we will probably not see a green arrow in the short term if the market rebounds. And so these green arrows can only happen when the red candle touches this bottom line. So it didn't touch there, so we'll have to see. I don't think we'll see one, even if the market data is good, just because of the way the indicator is set up. But we'll monitor that. Now to gold. I do think, and why I added gold last year to the video, I do think gold is God's money. I think gold is one of the longest term assets, currencies, wealth saver type investments. Every civilization in documented history has used and valued gold in some way, shape, or form in every corner of the world. And so the other thing that a lot of people don't understand, certainly here in the West, is that China and India is like 8 Americas. And the Indian culture and the Chinese culture are very pro-gold, meaning like their citizens are very pro-gold. India has a very strong and healthy gold market, especially in wedding season over there. And so there's a strong demand at the retail level for gold in those countries. And again, the population is 8 times what it is here. And so could be very bullish for gold. Central banks in 2018 bought more gold than any other year in history except one. I don't remember what it is, but the second largest gold central bank gold purchasing in history happened last year. And so I do think gold is going to trend higher in 2019. We're not showing that so much on the chart right now, but I think you're going to see that continue to appreciate as kind of a counterbalance to all the fiat money. Fiat is F-I-A-T. Essentially, our currencies aren't backed by gold in terms of a fixed window like they were really since the beginning of founding of our country. That went away in the 70s with Richard Nixon, got rid of the fixed gold window. And so, but our central bank owns the most gold of any entity in the world. So it just doesn't have a fixed exchange rate to gold, but our central bank and our treasury own gold more so than anyone else. So it kind of is that asset backing our currency along with the taxing authority of the government. But like I've shown in a lot of other videos last year, between China, Britain, Europe, America, and obviously all the other countries in the world, there's not one currency backed in a fixed exchange for gold anymore, not even Switzerland. And so every major country and currency in the world is set up on this central banking landscape, and all money is debt. And so debt has to expand for our money supply to expand. And so in that, gold has truthfully been the asset over 5,000 to 10,000 years across every documented civilization that has been currency and a store of wealth. And so I do think you're going to see a rise in gold, and we're going to continue to cover it here on the videos. And that's kind of a background as to why we're going to cover it. And then lastly, this is a daily chart on Bitcoin. You can't really see it here behind the label, but there was a third green arrow there, so there's 3. And it's putting in kind of a bottom pattern. So it'll be interesting to see if Bitcoin can catch some movement here and head up along with gold, as we're seeing major countries around the world have a lot of instability. Mainly, we're hearing a lot about Venezuela and what's going on down there politically. It's interesting. They're actually trying to get their gold out of Britain, and Britain won't give it to them because they're not supporting the established leader right now. And so America and some of the other countries are trying to get a different political party installed, and they are withholding the gold from the current administration so that they can't entrench themselves and or potentially steal the money. So it's interesting. He who owns the gold makes the rules, and Venezuela does not hold their own gold. So they're trying to get it through other areas. So it'll be interesting to watch. But it's interesting. Bitcoin is it's kind of like a world currency now. And obviously, way down from its almost highs in December of 2017 of nearly 20,000. It's interesting. JP Morgan just came out the other day saying that they're launching their own cryptocurrency to settle interbank transactions. So Jamie Dimon, the CEO of JP Morgan, 2 years ago, 2017, came out and said Bitcoin's a total fraud and it's crap and it's never going to do anything. And now his bank, one of the largest banks in the world, and one of the primary dealers for the Federal Reserve, meaning they get to basically sell money to the public. And along with there's 23 banks that are primary dealers. They have the responsibility of basically selling government bonds and injecting liquidity into the market. And so they are creating their own cryptocurrency. So it's funny how things come full circle. And there's a lot happening in cryptocurrency still. And I think you're going to see this kind of Bitcoin and some of the cryptocurrency market come out of the basement here later this year. So we'll see how that progresses as well. But it's definitely looks like it's trying to put in a floor from the chart on the daily. So we will continue to monitor that. That's all we have. Hope you have a great Valentine's Day and rest of the month in February. The market is up and it's cold outside. So hopefully the charts continue to warm our hearts. That's all I got. Take care and we'll catch up with you soon. Thanks. Bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.